Hey team, we'll be underway in about 3 minutes. Just setting up the streams, making sure they're working before the team come in and join me. Welcome in. Okay, guys, we're about 3 minutes away. I'll be back on camera in a few seconds, guys. Hi, everybody, and welcome along. Nice to have you on the show today. It's Paul Bottrell here, the senior trader for Access to Wealth and Online Trading Profits, and I guess head of the trading team is my official thing. Just waiting for the team to come in and join me. Nice to have you. Nice. First time we've tried the countdown clock on board. I thought it did hold us along and fill some screen for us while we were getting ready, which was quite cool. I'll just have a look and see who is in the room with me at the moment. And it does look like I've got Geoff in the room, still waiting on Alexis to take us through some fundamentals. Geoff, how are you?
G'day, PB. You're going well, mates. Having a nice little break up here on the east coast of Tassie.
I'll tell you what, Geoff, I'm going to unmute and see if it makes any difference to what you're saying.
Okay.
Hey, mate, how you going?
Yeah, I'm going very well, thank you.
The other thing I can't hear, obviously, the background is the countdown climb, which I've now killed away. Mate, how you going?
Mate, I'm pretty much on top of the world, as a matter of fact. I'm having a nice little break on the east coast of Tassie, where it hasn't stopped raining since we got here. But that's okay. Reading books and watching the wildlife. So it's not too bad.
Nice, mate. Sounds like a pretty good time. Might have a bit of a run through the news that's coming up ahead as we wait for the rest of the team to come in. How's your trading week been?
A little bit of a mixed bag. We got a couple of little losers, but we've got quite a few going at the moment. I think net we're 1,030 pips up at the moment for the last couple of weeks. So that's what we're holding at the moment. We're about 1,030 in profit. And a lot of that banked. TP's 1 on 4 of the positions we're holding. TP's 1 and 2 on 2 of the positions we're holding.
Thank you, Alexis. Shukri, can you reply to me on Skype? I messaged you a while ago. If you can let me know the answer there, that would be great. Alexis, I'll just give you some powers. We'll come to you in a minute. So Ash is in as well. Welcome along, Ash. Nice to have you on board.
Hey, buddy. How's everybody doing?
G'day, mate. I'm good.
Reasonably well, yeah. I think no complaints from the team. I think it's been a nice solid week. My voice is struggling a little bit. A few sharing sessions this week and a little bit of flu, and it's a little bit of a struggle to talk, but to be a relief for everybody else in the room. Busy old schedule for today, and nice to see the stream working on YouTube and Access to Wealth, online trading profits, and knowledge Access to Wealth. God, there's always a lot going on in these shows, isn't there? Right. We are nice to see you all in. Ash, did you finish up your conversation with Ainsley at the same time I left, or did you guys keep going?
Yeah, we finished up when you left, mate.
Oh, cool. Interesting stuff going on at the moment, isn't it? The market's an interesting old place, right?
Yes, it is, and I think that it gets even more interesting as we approach the US election. That's the main thing in focus, alongside this continued battle with the pandemic and how central banks across the globe support the economies and governments as well. Obviously, we didn't see that package come through from the US government, and I thought that would put a lot more pressure on the markets than it did, but it didn't put too much pressure on. But that does bring the central bank back into focus, and I'm guessing the reason that the markets haven't been too much under pressure is because they are wondering what the central banks might do. I can't remember. I'm pretty sure it was Kaplan, but I can't remember the guy's name. But I'm pretty sure it was Fed member Kaplan that came out and said that the likelihood that there will be more easing at this stage is slim, and they probably want to just continue to see some of the data points. And the data points have been pretty solid. There's been a couple recently that I think we should be a little bit more concerned with, but generally speaking, the data points have been pretty good. So what does Jerome Powell come out and say? And I think what he does come out and say is going to be quite important for the market movement this week and beyond. And obviously, we've still got the Trump issue as well to contend with, which I would suspect. I mean, it's very difficult to judge what Donald Trump is going to do, except for the fact that he's going to do something random and say something extreme over the course of the next few weeks. Because when he's a man in a corner, he does come out. Usually, he will come out fighting, and it's usually something quite extreme. So, he's likely to do something, but at this stage, I suspect he's going to actually have to take action, because it might end up that the market just judges what he's saying as hot air as we approach the elections, and they just wait for the changing of the guard. Other
than Donald, we've got Fed Chair Powell speaking at just after 1 a.m. Is this? I think it must be New Zealand time. And we've got Jackson Hole Symposium coming up this week as well. So lots of news that will push the market around. Perhaps time to get to Alexis and have a bit of a fundamental update. Alexis, are you with us? Alexis, are you with us?
Yes, I was just muted. All right. Yeah. So great start. Let's just. I got a couple of articles that I'll just like to flash at you guys. Give me 1 second. So there are a couple of articles out on places like Bloomberg and stuff that has pretty interesting information. Paul, I can't seem to share the screen though. All right, so I can't quite share screen, but all right, I'm just gonna have a chat about it. So there is a couple articles that's out. They are talking about how central banks.
Alexis should have screen sharing now, no trouble at all.
Oh, all right. Okay, so there's this screen over here. Okay, so this is an interesting article in which they're talking about central banks scaling back dollar lending operation as demand drops. So basically, it's really about like whether or not the central bank will lower the amount of dollars in the market. And as usual, I actually like to look at the euro dollar because the European Central Bank, Bank of England, Bank of Japan, and the Swiss National Bank has said that they will kind of offer short-term dollar funding via the Fed swap lines only once a week instead of 3 times. And this is because of the continued improvements in the US dollar funding conditions and the low demand. So with this perception of the low demand of US dollars, then the question would be, will the demand for dollars cause the dollar to be less attractive in that sense, and how will that affect when we are pairing it against the other currencies that we're trading against? So a couple of things that's coming up this year would be of course the elections coming up, and while the euro has had a lot of strength from the past weeks, we are wondering whether or not the euro can continue to outperform the US dollars. We are talking about the resurgence of COVID and all that, but I think at the end of things, the US seems to have also a very high number of bankruptcies of large companies as well. So it's a question mark of, I think, who will hold out better or who will recover a little bit better as compared to each other. So if you're looking at the euro versus the dollar, eyes are on the euro for now, but like I said, it's anyone's game because I think the virus is really unpredictable in the way it's been affecting the market situations. And I think also there are a lot of statistics and situations that we don't see as fast as we'd like, and there'll be a bit of lag, and it'll come up only weeks and months later once the statistics starts to compile out. Yeah. So when we talk about euro dollar again, I want to just take a look at this is just a chart in that sense, and it is at a very interesting place right now. This is the daily time frame for the euro dollar chart, zoomed out a little bit all the way. And if you look at it, the euro dollar is actually at a really interesting level at the moment. It's a question of can it go any higher? So I think about 2 weeks back, we were a bit bullish on the euro because of their cooperation and all that. And it's got another level of resistance right at the top here, and it's just sitting above this support level over here. So it's in a way it's a bit rangy right now, but it's a question of, can the euro push higher? And it's comparatively, I think for the past 10 years, it's not the highest yet. So there is a lot of upside. Not sure if there's any more, the technical traders here can, see anything on this chart that would add, to the fundamental bias of a slightly bullish euro, continued bullish euro to the weaker dollar.
Cheers, Alexis. Thank you very much for that. That's interesting stuff. Anything else from you?
No, I'm good.
Cheers, Alexis. Thank you very much. We will, I think from you, we're heading over to Ash. I'm just about to make a bit of an announcement into the group. Let me just see if I can get this. Ash, are you up, buddy?
I certainly am.
Cheers, mate. What are we talking about today?
Well, I mean, I think maybe continuing slightly on Alexis's theme about the US dollar is probably wise from this point, because yes, we are going to be discussing the stock markets, but really the story for me is about the dollar, and it is about the US dollar. And when I look at the dollar index, so Alexis just talking about the euro dollar, this is the chart of the monthly on the dollar index. And there is a really interesting pattern going on here. Now, everybody knows I love the inverted head and shoulders, which you can see. Ooh, let me see if I can. Oh, no, I can't draw that just yet. Actually, I could. You can see just here, there's an inverted head and shoulders, which it's not in the best place because it's not at the lower end of the range down here. But it still could indicate that we could be getting some sort of bottoming pattern down here. Now, there's obviously going to be a few ways that we'd have to make judgment calls on where it goes, but the most obvious first point of call is going to be along here. Now, if we look at this and we take the view that for a trend to have indicated that it has changed to the downside, it needs a 5% close below the previous structural area. Now, this is the structural point, because that's the last area that was tested before it went back up again. So if the market comes down here, it's still in an uptrend, and because that really is the base of that uptrend, then if it closes 5% below that point, then we start to assume that the trend has actually changed to the downside. Now, if we take a measurement here from that point to that point, then we see the close is only 3.3% down on price. So I think it could be questionable. Now, you know, there are different schools of thought on the percent change, and there are some schools of thought that say, you know, a 3% change in the price is enough to suggest that there is a downtrend. So between 3 and 5%, we've got a bit of a question, but that's why I like the 5% rule, because, you know, 5% and beyond, then the question really gets answered for us. Now, the good thing about the 5% and beyond at this particular stage is that it would have to take out this low down here at 93, well, around about 93. So if it closed below 93, then we start to get into that 5% range, and that would really suggest that the trend in the dollar on the primary trend has changed to the downside. But right now, I think we could quite easily argue that maybe the dollar hasn't quite changed, and there are going to be some bulls that are still interested. We also see this trend line here, which looks pretty convincing for a potential buy zone. So that point would suggest, at very minimum, that we would bounce back up to this point here at 96. So that really does put the euro's rally in a bit of question. And also, it starts to put the stock market's rally in a bit of question. So that leads us really back to the stock market. Because if a stronger dollar is to come into play, then we are likely to see the things that we have enjoyed really seeing move to the upside, the likes of gold, which we see here. Again, a potential head and shoulders pattern forming there. So a bit of negativity coming here. But looking at gold on the monthly, it has got, in accordance really to the chart, very, very overextended up here with these huge kind of, you know, a big parabolic move. But look at this last month's bar. Now that does have the look of an exhaustive bar up there. You know, that it looks like the market could be, the gold market could get a bit tired at this point, and really we are starting to see that come to fruition. Obviously, a stronger dollar is potentially going to push this gold price lower. Now, what that should do for us as traders is get us on the lookout to where we can buy gold up. Now, it doesn't suggest at this stage that we should be buying gold. That's the first thing that I'm noticing here. If I'm seeing a stronger dollar on the dollar index, a weaker looking chart on gold after this exhaustive move, then it would suggest that gold would probably drift a bit lower. But that doesn't mean that we should be looking for a change of direction in gold, because gold, you know, the structure on gold is way down on this monthly chart. It's right the way down to this point here. Let's bring that in over here. Right the way down there.
So, Matt, we've got dollar index looking due for a turn, so possibly some dollar strength coming. Seems to be a pretty familiar theme amongst the guys at the moment, a little bit of dollar strength to be expected. Yeah. And you've got gold having overextended and now looking for a bit of a pullback on there as well. Is that right?
I think so, yeah. But I wouldn't want to trade it. I wouldn't want to trade a pullback in gold. I think it'd be very, very dangerous, because you are fighting the primary trend to the upside. So it could be very tricky. It could be a very tricky move to the downside. So yes, I'm looking for retracement, but I'm looking for retracement for potential buying opportunities, you know, and there's a few spots that I'd be interested in with gold to see if there's a potential turn. But I think that we let it go, let it come down, look for these price points. You know, there's a price point there, looks like around about the 1830. These are gold futures, so it's going to look slightly different on the actual spot gold. But 1830 looks interesting. 1770 looks interesting. And then finally, that point down there would be of huge interest to me, around about the $1,500 an ounce would be really interesting. So I think gold to come down and let it come down as far as it possibly can, and then see if we can get the turnaround, trying to pick it up in these areas would be the sensible play for me on that one.
It's one of the things, isn't it, Ash? If you believe that gold's going to $3,000, which is the current talk, then waiting for it to get down and reverse, and you've still got $1,000 to get in, for God's sake. There's no rush, right?
Exactly that, mate. And the thing is, I don't know how we can't make a case for it going for $3,000 right now. The inflation story has not even started yet. We're nowhere near what we need to see with the inflation numbers to be really bullish on gold, which means that we can get way out in front of it. But I think would be quite foolish not to expect some pretty extreme inflation coming into play. So some protection in a portfolio with buying some gold would be very, very sensible, and it's just about whether we can pick it up at the right price. If it doesn't come down to any of these price points, then I'm going to miss the trade. There's every chance that I'm going to miss out. But if it comes down and tests these levels, then I'm going to be slowly easing my way in. And that's the other aspect of it. When we're considering what the charts look like and what we need to see, that's only half the question. The next question is, how do we manage the risk to get ourselves a position on gold to, enjoy taking a position maybe at 1830 and maybe being part of the same position at 1770. So we scale in here and scale in here. And if it drops, then we get stopped out. And then we start it all the way back down here again, maybe scaling in again and scaling in a little bit lower down. There might be that final move to this particular level, which I'd be very, very surprised that if it came down there.
It's hard on the current sentiment to see this, right? It's hard to see this big a pullback. I mean, technically you can make the case, but the sentiment on gold is so positive, and there are going to be people buying the dips the whole way down. It's hard to see it. It's hard to know what the stimulus will be to get it down there, right?
Yeah, it really is. It really is. And the central bank, we're really back to Jerome Powell on Thursday. Really, what that does suggest, we just looked at Forex Factory. We know Jerome Powell's out on Thursday. So what that is saying is that Monday, Tuesday, Wednesday, there's likely to be some choppiness in the markets. In the stock market and in the currency markets, really up until Thursday. So we have to make a call. Do we want to trade that? Somebody that's got a strategy like Geoff's is probably going to enjoy the first 3 days of this week. But for any trend traders, be very, very careful. There's always an option not to trade. Look at the S&P. If the dollar is likely to strengthen, then the S&P is also has got a pretty good probability of dropping down as well, and maybe even coming down to rest on some of these levels. But we got to be aware that we've got the central bank out on Thursday, very, very important. We've got a US election which is going to start ramping up by November, and we've still got this COVID situation to fight as well. So it does make the story to the upside, I think, at this particular stage and going into Thursday, less convincing, in my opinion. I mean, that's the S&P. So yeah, I'll be less convinced on that. The FTSE 100 looks like it's in a buy zone. If we forget take the monthly chart aside for right now, because it's not quite as clear. But look at this on the daily. On the daily, this is suggesting that we do have a pretty strong horizontal point here and a potential turnaround bar. So if we're looking for any upside at all that could still stay within its range and its boundaries, then it probably would be the FTSE. And we need to watch out, because what's likely to happen is if the dollar does strengthen, then the pound is likely to weaken, which could help something like the FTSE out. If the euro is likely to weaken, it could help something like the DAX and potentially the CAC and possibly the IBEX out as well. So European stocks this week, to me, look quite interesting. Seeing a stronger dollar really moves us into that European space, in my opinion. So that's what I'm looking at this week, mate. I'm looking for possibly some FTSE strength, along with the DAX, to move to the upside. Forget the NASDAQ, because who knows where that's going next. It probably, it doesn't really care what's out there. It's going to continue to go higher. I would see some potential weakness or choppy sideways price action between the S&P and the Dow over the next few days as well. Central bank comes out and says more stimulus. Watch the pop, because the markets are going up again. If they say they're leaving things on, yep.
Sorry, mate. I thought I might invite the attendees. if they want to do it live in Zoom, or those on YouTube or Facebook, if you want to ask any questions about this, put the questions in the box and I'll ask them through to Ash in a few minutes. We've also got in the room, I think, a number of the trading team. Last time I had a look, I think we've got Julian, Lloyd, Geoff, Ainslie, Ash, yourself, all in the room. Guys, do we have any questions for Ash on the stuff that is covered? We're all talking about short-term up in US, run up in US dollar. We're talking about a pullback in gold. We're talking about, I like the European stock market thing, Ash. There's a feeling out there that Europe's doing better than America, and that we're starting to see some money flow from America into Europe. So, you know, further gains for the European stock markets. Again, it seems to fit the common talk at the moment.
Yeah, do you know? I mean, I wouldn't agree with the thesis that the European is doing better than America, because the numbers don't suggest that. But what I would say is that if the stock market in the US gets to a point of valuation, that if we believe that global GDP is going to continue to grow, so the gross domestic product right around the world is going to continue to grow, then why would you look at the US stock market at the current valuations? Why wouldn't you switch your view to going, well, you know what, the FTSE's nowhere near halfway home, getting back to its highs. We look at the DAX as well. I mean, the DAX is fairly lofty, but you know, it's still not near not as near the all-time high that we saw before the pandemic. Well, in actual fact, yeah, just before February actually just hit. So we're not near the all-time highs on that, not as near the all-time high. So I don't think the numbers really stack up so well for the European space. But what does stack up is the fact that the S&P is here at all-time highs. The Nasdaq is beyond all-time highs by quite some distance, and we were talking about a bubble earlier on, and
God,
yeah, and actually I get your point, mate, because you know, we talked about 2010, but if we even forget 2010 and just go back to this year, the Nasdaq, I mean, I don't know what percent, it must be about 40% higher.
Yeah, it's nearly 50% up in the last 5 months. It's like, you know, gosh. Like I say, I don't trade the Nasdaq, but trading it doesn't look difficult on that chart, mate. You just
it
wait
doesn't.
For that pull back and buy it and go through the roof. Mate, I've got a question that's coming from Fad. He's asked, this pullback to those levels in gold will have to be in relation to US dollar strength as well, or are any other components to it? So to get gold down to sort of 1700, we're going to need some US dollar strength. I can't see gold in there on US dollar weakness. What else might have to come into play for it?
Well,
thank you very much.
Yeah, thank you, Fad. I mean, I'd certainly refer to Ainslie, as the expert on gold to give us the full detail. But what I will personally be looking at is, yes, the US dollar strength, which is going to come from the assumption that there will be no more easing, in my opinion. You know, they will be very unlikely to be cutting back on easing, but you know, the likelihood is they leave the level the same, so that could strengthen out the US dollar a little bit. And maybe, you know, we got to continue to follow the inflation data as well, because if the inflation data continues to be weak on top of the US dollar story, then well, not weak, but you know, if it's not really picking up at the pace we thought, then that might also kind of ease gold back a little bit. But there's so many different reasons that people buy and sell whatever product they have in the market, that there's no way that we can know what they all are. We can only really, you know, look at the metrics that we make our choices and our decisions on, and the decisions will be made for me on the dollar strength. So if I see the dollar weaken again, and my view that this pandemic is still hugely problematic and that inflation is just around the corner, potentially with a Joe Biden victory as well, you know, that there are just some of the things. I mean, you can't discount the US election when you're considering buying anything in the next 3 to 6 months, because you know, aside from Donald Trump doing something very, very random, if Biden gets in, there's a change of the guard and a potential change of the approach of the way that the country is run. And it won't be anti-business, but it might be a little bit more protective, you know, against those huge businesses and putting certain things in play that might just kind of suppress them a little bit, which again brings gold back into the story.
It's one of those things, isn't it? When you talk about, you know, gold getting to 1700 or 1500, what could be the cause of that? And certainly one thing that could be the cause of that would be a disputed election result in the US and some kind of non-resolved dispute over the election result, which could go on for a little while.
Yeah. Which he's already started to bring in. It's difficult to know sometimes, isn't it, mate? You know, because you get great numbers from the stock market, and the stock market weakens. And then you have to kind of like sift through yourself and go, why has that happened? And then you go, okay, well, the reason it's happened is because there's going to be less stimulus now that the numbers are really good. But sometimes the number that you think does not equal, you know, it's not a 1 + 1 = 2 game, is it? This you really have to do some sifting through. Any data point could turn it one way or the other, really.
Yeah, I think that's really fair, Ash. And I don't think you always know what, you know, sometimes we make assumptions about what drives it. I mean, we may not be completely right. You know, it's...
Yeah.
Look, Paul, I've got a question for Julian on gold. I think, well, Julian's in the room. We'll be crossing to him after the cross with Ash. He'll be our guest in today. So I'll ask him your question when he comes in, if that's okay. Mate, I'll just stick again. Any more questions? Anyone, any of the team keen to ask Ash anything about this? Any comments for anybody on, other than Ainslie, we'll do our own cross on gold. Anyone else want to do anything on gold, dollar index, euro dollar, and the stock markets?
I think it's going to be an interesting week this week for Geoff, but Geoff is going to have to sort of tell us what he's going to be looking at. I think it's going to be quite quiet. You know, anybody that's going to be in the UK and US show, I think it's going to be quite quiet on the trading front. Which puts us in a good place to get prepared for Thursday, so we can actually get down to some other types of analysis when we're looking at this stuff. But I'm looking to buy the FTSE early in the week for at least a bit of a push to the upside, or the DAX maybe earlier in the week for a bit of a push to the upside. But then Thursday, I think it really starts to heat up. But I think Geoff's going to be a busy boy. I would suspect anyway, up until Thursday, and then you know, I'll probably be busy from Thursday and Friday.
A busy granddad. He's the granddad of the company, remember?
I'm primed and raring to go.
I tend to agree, by the way, and I think not only Powell, but you've got Jackson Hole, and Jackson Hole can be one of those things that can rock a market round. There's a few people there who have a say in the way what's going to happen in the world in the next 2 or 3 years, and I wouldn't be at all surprised to see Thursday, Friday add a bit of volatility to the whole thing. And I like what you're saying about, you know, seeing if you can establish a position early in the week and just hold it through until you get the side right. And you know, at the end of the day, you know, you tend to be long on a few things as they go into Jackson Hole because you expect them to come up with some solutions. But, you know, they're clever people than we are, and God knows what they'll actually come up with. Anyway, but yeah, I do agree with the run on the week.
Yep, and I don't think we can really kind of do a section from the UK without mentioning the pound and having to mention Brexit again. But really, Rich, you know, crazy moves really last week with the pound euro. Look at this first bar. You know, that was Thursday's bar. That was a Brexit deal was in the offing. And the next day, Michel Barnier comes out and says, there is no Brexit deal in the offing. And all of a sudden, the euro strengthens yet again against the pound. So this is, I mean, I know this has been incredibly frustrating for Geoff, but...
could we gag her at all, Ash?
Gag who?
The one that pushed it back up on Friday.
Oh, actually, that's a guy. You know, they like their feminine names in Friday. Michel Barnier. It's a guy. We won't get him on as a guest ever.
Always nice to have you on the show, Geoff. Always guaranteed something's going to come along that's going to add something to us. That's one more guy. People who may sue me from the show, Michel Barnier.
She will not be making an appearance on our show anytime soon.
Barnier, look how I thought Julian was in the room. He'll be out. Sorry, are you finished on? You're not finished on the pound, are you? On euro pound? Sorry.
No, I am, mate. I mean, just to say that you know what a frustrating situation that we have with Brexit. But I think as things close on Friday, there's no Brexit deal, so expect maybe some further pound weakness going into the early next week as well.
Hey, Ash and Geoff, nice to have you both on at the same time because we're going to go to Julian. But who's making his first appearance in this show at 6 o'clock? Who do you guys reckon it is?
In this show?
Pingney can't make it. He's off to family dinner tonight. Pingney can't make it. So instead we're going to be talking...
Oh, man, Shukri's
in at 6 o'clock for awesome. 5 minutes run through the cryptos. What was that? Sorry, Geoff?
I said fasten your seatbelts.
Yeah, amazing, isn't he? Gosh, it's, he does remind me of you a little bit at times, Ash. He's once he gets going, for the time on him for his 5 minutes, I think he does love talking about it, doesn't he?
You need a hook.
And
Oh,
you,
the man
Bill,
knows,
Tony's done
man
some
knows
amazing
his
stuff
stuff.
in your show, hasn't
Yeah.
he?
Oh, he knows his stuff, and I think that we are kind of entering this realm of a different a different product with cryptocurrency. So to have somebody with the knowledge that Shukri has under his belt is just gold dust, really. We need to know this stuff, and my knowledge of cryptos has increased no end over the last few weeks. I'm really getting into it now. I'm getting right into the space. I missed Shukri's thing on Friday because I couldn't make it because I actually had a coaching session myself on Friday, so I couldn't make it. But yeah, every Tuesday, what a fantastic session we have with Shukri, because the man knows his eggs. He's brilliant. Yeah,
mate, and it's we're making some announcements at 6 o'clock around some future stuff we're doing with crypto. I'll get some dates organised for that. I'll just pick them up over here. But from crypto, instead of crypto, and I know that there's a crypto trader in the household with Julian, or a crypto guy in the household with Julian. But I think Julian's still in the show. Julian, you're our guest for today. What have you got to offer for us today?
Thanks, Paul, and hi, everybody. I hope everybody is in a good mood and had a good trading week last week. I'm struggling to once again disagree with Ash in any meaningful way. So, Ash, great analysis. Thank you very much for that. I think your targets in gold, Ainslie, may have more to say about that than I do. I think possibly a little optimistic to the downside, but let's all hope, right? Because I want to buy some down there if we get down to those places as well too.
$1,500, we're all buying it, right?
Yeah.
Yeah. Well, it would certainly be. It would certainly be a little bit cheaper, but the journey to 1,500. I hope if we are going to go there, doesn't go the way in which I think it might go, which is that everything will go down. That won't help us one little bit. So I'm not. See, I view gold. My opinion about gold has changed now from you could variously call it an inflation hedge, a cheap asset, a under-owned asset. I don't know, any of those things that people were talking about, or more importantly, not talking about 18 months, 2 years ago, to now something which is very expensive against marginal cost. The commercials are significantly short of it and trying to hedge up as much as they can.
Yes.
All the chatter now about gold is it's over-owned by everybody, and more importantly, the saying is, I don't recall anybody 3 years ago when gold was trading at $1,100 going, you need to put 15% of your account into gold and just forget about it. Now we're at $2,000. Everybody's going, you need to put 15% into gold into your account and forget about it. Well, the interesting thing is that at 1,100, that would now be 30% of your portfolio. So, let's not really go there and have those conversations. So I think that there's gold is an investment trade now, and it trades the same way as any other asset out there. So just bear that in mind if you're doing it. I know Ainsley will have more to say about that than I will, and I'll probably leave it at that point. To answer that question, no, I don't think the retracement in gold is over. Yes, I think it's going to go lower. No, I have no idea how it's going to get there.
Well, I'll just bring up some charts for you so I can jump around if you're looking at any stuff, Julian. I'm not sure if you're going to share or not at this point, but
Look, I think I'll give you an idea of a couple of things that are on my radar screen for this week. Yeah. Go on then, let's do this one. So Apple apparently has doubled its market cap in the course of 4 or 5 months, I believe. Not even that. I think it's been less time than that. And the valuation of Apple, which is now quite unbelievably 11% of the S&P 500. So the other 499 stocks in the S&P are only worth 90% of the S&P these days. So that's unbelievably extraordinary. I've run out of adjectives to say about Apple. If you're long of this, then enjoy the journey. If you're long of Tesla, enjoy the journey. If you're long of Amazon, which still, apart from its cloud business, doesn't appear to make any money to me, enjoy the journey and realize exactly what is going on. If the chart could get any more exponential, it would actually fall back on itself. So, this is a a journey into the unknown for all sorts of valuations. There will be many people who will rationalize the valuations here. Trust me, you just need to go through CNBC one day. Nobody's prepared to say that Tesla is ridiculous, that it's worth, I don't know, what is it? It must be worth by now more than all of the car companies in the world put together, because it is, and still it barely makes any money. So I'm very excited about the fact that things are going to get exciting. I don't know where, I don't know when, but this is ridiculous and it will come off. The question is when, how, and how is this going to unfold? And you know, people sometimes say that bull markets sometimes take a bit of time to top out. Not these ones. Okay, this is an exponential blow off top. When it tops out, I'm afraid you will miss it, and we'll never see that again for some period of time. I don't know when that's going to be and or how it's going to be, but it certainly, as far as the Nasdaq's concerned, will take place, and it will be crazy and it will go nuts. I just don't know when. That doesn't mean to say that we won't be buying it all the way down at different points, because we know that some of our S&P signals and things like that work really well in bear markets. So there's lots of opportunities, but valuations are crazy, right? Apple worth 2.3 billion and 33 times forward earnings. Seriously, I don't know what numbers those are, but they're just ridiculous to me. And I think Tesla's also ridiculous, but it was ridiculous a little while ago. So I'm going to keep quiet. I'm not going to say anything. I'm just going to recognize what type of market you're in, guys. And if you're long of it, enjoy the ride, because at some point you're going to be tested and tested hard, right? You will be down 20% in some of these stocks in 2 days flat when they reverse. Sadly, when that does happen, that's going to have an impact on some of the other markets too, like gold, because they're just another investment story. That's pretty much it. I'm actually happy with my words of caution here. I'm looking at a couple of other crosses, which I think are quite interesting. Some of the Aussie crosses are shaping up, Paul, right now to, I think, roll over a little bit in some sense, in some respects. So Aussie yen is one that I'm interested in at the moment. Aussie Swiss as well too looks like it's got a potential to roll over. They've been sitting at a level for too long. I'm a little bit nervous about oil. I mean, apologies. I'm nervous about gold, but I'll let Ainsley deal to that one. The oil market, I'm increasingly concerned about. I don't understand what's going on here. I think there's two forces at play. There's a declining rig count in the States, which is a huge impact on the oil market, and I also think there's the fact that the surplus oil in the world hasn't been worked through yet, and it is still vulnerable to a bit of a sell-off if we don't get OPEC to continue to decrease their production, or OPEC plus to decrease their production. So my story for the week is caution. I think we've got a interesting week coming up. There's buy signals in front of the New York holiday in the stock market this week, so it should be a benign to a slightly positive week. However, my however in this is signs of weakness are to be taken and not avoided in the stock market. I think there is a correction coming. I just don't know when, how, or it's going to work. And I'm really sorry I can't give anybody any more information than that. There are reasons why, but there's a cyclicality reason why this week is really important for stocks. I also think that actually the stock split in Tesla and Apple occurs on the 31st of August, which is next Monday. So in the world of buy the rumor, sell the fact, there's your trigger for the stock market to go down when the S&P and the Nasdaq reset because of the Apple and Tesla stock split. That's pretty much me done, Paul.
Cheers, Julian. Thank you very much, mate. One of your boys trades a bit of crypto, doesn't he?
Yeah, he does actually, and he's just sold out last week. So yeah.
Oh, really? So it's a bit toppy on the old Bitcoin at the moment for you.
Yeah, it's had a bit of a move back, and I think he's still bullish long term, but the market's showing a little bit sign of weakness, I think, and in the last few days he's been a little bit more cautious. He's now telling me. No, he's now telling me not. He hasn't sold that much.
Say hi to him.
But yeah, look, I think as with all of these things, right? Don't forget, Bitcoin's the same as gold, right? You can tell it's a different. Again, Ash's. I'm afraid Ash's guy that knows way more about it than I do. I view it as being another asset class, and if assets go down, this will probably go down too.
Yeah, I think it's also very susceptible to US dollar strength and weakness as well as it goes.
Yeah. Look, Paul, and that exactly right, and that's the we've been talking about that as a theme now for about 2 weeks. That theme of mine holds true for another 2 or 3 weeks just yet. We haven't really seen the US dollar rally that much yet. I don't really consider a big figure in euro to be a rally.
Yeah, I think that's really fair. Guys, any questions for Julian before we move along? Any questions for Julian?
So there's one here. Yes, I do believe silver is better than gold, but if you look at that sell-off that happened recently, 2 days to lose a quarter of the value of silver is 15, 20%, whatever the hell it was. It went from 30 to 23. So that's 7. Yeah, it's a quarter, right? A quarter of the value of silver in 2 days. Come on. This isn't an investment case, right? This is a trade. So it's a bit volatile, and good luck with this.
This is not a buy and hold. This is a pick your side and then make money on the hold, right?
I think the investment case for silver is long gone now. It's too volatile at the moment to invest in. We need some quiet in that.
It's done some yards this year, hasn't it? March till now, it has. It's gone some yards. $11 to $26. It's done a little bit along the way, hasn't it? And while people keep comparing silver to gold and saying, well, gold's gone so far. Well, silver's doubled in price, for God's sake. It's not a bad move either.
Silver's very cheap compared to gold. So is platinum, by the way, for the record. It's very cheap compared to gold. You look at a monthly chart of platinum, you'll understand what I mean.
What's the code on platinum again?
PLT. You might have it there. I don't know if you have platinum on that.
We do have platinum. I'm on not on a pop. I'm on a live account. I'm sure they've got platinum. Was it palladium?
I think it's XPT, mate.
XPT.
There we go. 902. That's right.
Run a session on the euro for us. Thanks, Ainsley. Much appreciated. And Geoff, I'm going to ask you to run a few minutes on the euro in a couple of minutes before we go to Strictly. So if you can be ready for that, that'd be great.
If you could put that on a monthly, Paul.
Yeah, mate.
I don't know how many months you can go back with that. Is that as far as you can go?
Let me I think it is. I can load more memory, but it would take me a minute to do that right now.
Don't mind. Just trust me, guys. Go look at a long-term chart. Go look it up on stockcharts.com, and PLT or PPLT are the two platinum ETFs. You'll see what I mean when you go look it up and see how cheap platinum is. And that has a rate that traditionally has had a historic ratio to gold, and it's still very cheap against gold. So there's not a huge amount more to be said around those things. How
did natural gas go this week?
Well, whack the chart up and let's see.
Mate, give me the ticket for that as well. I don't trade natural gas.
XNG. There we go. Right at the bottom. Just keep going to the bottom of where you are now. No, next one there.
Mate,
and then probably come off the monthly for that one.
Yeah. Mate, while we're talking about, I've got one spot left in your program at the moment. People who want to spend some time with you, they get an hour with you every Sunday and a one-to-one. They get an hour with you every Sunday in a group of 4 or no more than 4, and then a one-to-one session every month for you with you as well, right?
Yeah, we have got a slot, and I'm looking forward for new people to join. If anybody's interested, then have a chat with Paul. I think the people that are doing it have got tremendous value out of it. And if maybe Paul could organise a quick one-on-one, or maybe somebody could put something testimonial-wise on about certainly the last 3 months. I think the folks who have been part of it have really enjoyed their time. There's natural gas. So I'm just going to highlight in natural gas the 2 trade points. So there's the higher low, which Paul, you've identified as the top touching point on that trend line, plus the market reversal that took place back in June. Both of those 2 things are very interesting. Trade entry points for me, and we then had what I can only describe as what I call the aversion point trade, but really the higher low and the impact that that's had in terms of, I don't think we'll see those levels again for a very long time, if at all, ever. And if you just pull the chart out a little bit scale-wise, Paul, you'll see why I've said that. Stick it on a weekly, you'll be fine. Yeah, look, there's something else going on here, right? And this is a, right. Now you'll see where natural gas was, right? It was literally as cheap as chips. And if the concepts around the shale pullback starts to make sense, then if the tight oil markets are going to start to reduce in terms of their output, then that has a direct influence on natural gas, because that's also what they pull out of shale fields is the natural gas as well too. So that means that natural gas will be less plentiful, and it doesn't take a genius to work out that if it's less plentiful and supply is constrained, that with the same level of demand, you'd expect to see the price rise. And that's pretty much what we've seen happening. The difficulty is getting on board this trade and staying on board with it, because it's just not coming back at the moment, which is really frustrating for me. I sold out most of my positions at 240.
Well, if it's going to come back at us, it's pretty close to the level where it might, right?
Yep,
Might have a look
exactly.
at some of that stuff.
And bear in mind, this is a weekly chart we're looking at here, right? And it trades like, we could have 10 of these bars on the spin, easy.
Yeah.
So hopefully we'll get another retracement.
Oh, cheers, mate. Okay, thank you very much. Geoff, you're going to take us through the euro for a couple of minutes before we go to Shukri to talk crypto? Oh, guys, again, on Julian's program, it is exclusive. We do encourage people to stay in it. The optimum, we think, is about 3 months with Julian. As I say, you get the session with him in a group of 4. It's for 1 hour before the TTR starts. So the TTR starts at 5:15 Sing. Session with Julian's from 4 to 5 Singapore time on the Sunday. And you do a one-to-one session during the month at a time that's suitable to you and him. We did publish Rob's testimony on it last week. Very, very excited. And look, it's really great. I think one of the things I really like is that, I hope he doesn't mind me saying this, but Rob's a guy who's been with us. Well, actually, he's come to us from somewhere else, and he's been battling away at Forex trading for maybe 10 or 12 years, and just struggling to sort of break through. And 2 or 3 months with Julian, he's starting to turn 5-7% a month and looking really good. And I think that kind of difference is pretty amazing. So if you get a chance to jump into Julian's program, do take that chance. And the people who want, if you're speaking to any of them, they're going to give you, as far as I'm aware, they're all going to give you very, very good reviews. Rightio, it's our chart of the day. We're going to do Euro as a group, and then we're going to go to Shukri on crypto. So, Geoff, what's happening with the Euro? And any of the team want to join into this, they're more than welcome. Geoff, you muted? Geoff, I have lost you. Just going to see if I can find out what's going on with Geoff. He's gone. Geoff is gone. I'd say the internet has let him down. Shukri, are you ready?
Yes, I am ready. Very, very ready.
Mate, let's. Can you grab the screen?
Yes, let me try to share the screen now. Okay, there it is. See it?
So, Shukri, you've been turning up on Ash and Geoff's US session show or UK session show for the last few months and talking crypto. You've shown them live trades where you've made a fortune. You've told them things that are going to happen. The boys pretty much worship you as a crypto trader.
Yeah,
and you're going to tell us the crypto now for 5 minutes.
Yes, I'm going to show you why. I'm going to show you why that this show is the most important show for crypto traders.
Okay.
Okay, and I'm going to show you why your format is right. You're going through the DXY, and then Ash goes through the stock market, and then Geoff was supposed to go to the Euro. That's the format it will be, because the most important chart, is it Ethereum USD? No. Is it BTC USD? No. It's actually the DXY. This, everyone, is the most important chart for crypto.
So
you
true.
have to, and this is Geoff's chart, okay?
Yeah.
We don't know where he was. Maybe the crypto gods, kind of kidnapped him. Because if you look at this, in early 2017 until early 2018, the DXY went down. And let's look at Bitcoin. What happened to Bitcoin and all the cryptos? It went up. Look at this bull run. And when did it end? Look, it started to end in early 2018 when the DXY started to bottom out here. Remember this? So this is very, very important. So when I look at what the direction the Bitcoin and Ethereum and crypto market is going, I look at the DXY. And how do I relate this? Because when I hear that the DXY is about to turn, I know that I have to be extremely careful this week. And then I look at Ash. Well, we all know that suddenly Bitcoin is following the S&P 500. So I look at it, when is the market going to turn? I've been asking him that every night. When is the market going to turn? When is the market going to turn? So now I have to be cautious, because when I come to this show, okay, what is the first point of potential turnaround. And although Bitcoin has come back a little bit, guess what? It's going to be when? It's going to be on Thursday night, right? Because Powell is coming up, and also on Friday, Jackson Hole. Okay, so you see that Bitcoin has, yes, it's good that Bitcoin is up over 11,000. It's only been here this period. So I think this will correct, which I want it to do. Okay, and now I'm looking at this weekend again. When I hear Julian, I hear him say that, hey, maybe August 31st is the time that it might actually break down for a little while because of the Tesla and Apple being split, and then, just sell the news. So all of this is so important for the crypto market. It's not only about cryptos, okay? Looking at cryptos, the market capitalization has gone up 358. It's now gone up to 361 a little bit. So it's really not doing anything. And when Bitcoin doesn't do anything, look at the rest. There's a lot of greens here, The smaller coins are going up, but that's a topic really for a different day. Now, you might ask me, okay, Shukri, now, when do you think the crypto market is going to hit 20,000? Or when is it going to go to an all-time high? Again, look at the DXY. If the DXY goes here, which is 88, and what Ash said, it might break down here, I think BTC would go to 20. I hope that doesn't happen. Okay, and then you might ask me, oh, but when is the crypto market going to go up? And here I relate to Julian. Julian, you can correct me. Because Julian said that the Euro USD, hope Geoff will give a very good analysis on this, I need to hear that too, is going to go up possibly to 154, right? So when is the crypto market going to peak? I think when the Euro USD goes here, 154. And that's what I'm going to use when I look at all these Bitcoins and stuff. So again, to end my 5 minutes, remember guys, you got to look at this, the DXY first. Let me draw this out. When you are in crypto, okay, every week come to this show, you got to look at the DXY first, and then you got to look at the SPX, and then you got to look at the Euro. And once you have that, then only you decide what we're going to do into the crypto market, because everything now is correlated, okay? So correlate. So this is going to make us much, much, much better crypto traders. So whatever Actions to Wealth has done, this Forex background is awesome, Paul. Really, really is. It just ties up together all into one.
Shukri, a couple of things, mate. You've shown the guys in Essence, you've shown live how to make money. They've seen you repeatedly say, do this and you'll make money. And my understanding is there are guys who've made a lot of money from it. Because with all, it's what we're about as a company. We're about helping people make money. And I don't mind if it's Andrew Mitchum. And by the way, guys, thanks for the feedback on Andrew's session yesterday. He was amazing. And you guys certainly loved that. And, all I'm really interested in is, can we bring you stuff that helps you make money? I don't really mind whether it's Andrew or Shukri or Geoff or Julian or Ash or Lloyd or it doesn't matter who it is. It's about whether they can help you to make some money. And I really like it. Now, we're going to do a free crypto program, aren't we? On what's the day, Shukri?
Geoff. No, Paul, you need to decide the day we will come back with you. So it is going to be a great thing because we're going to create a real wallet.
So we're going to do on the 26th of September, we're going to do a day on crypto with you, and you're going to show them how to create a real wallet.
Yeah, real wallet.
And get established in the crypto market, right?
Yes, and you can have the option to put Bitcoin there, Ethereum there, and we're going to even put another coin there that's not Bitcoin or Ethereum, because crypto is a big thing. Okay, now, one thing that I want to describe about crypto, it's really a weird world, because you guys might say, oh, Shukri, you say now that Bitcoin's going to go down. I say that's good. Well, one thing, you can buy Bitcoin and Ethereum cheaper, but when Bitcoin goes down, there are other coins that go up. Isn't that great?
I'm going to keep you on to a couple of questions here, okay?
Yeah, sure.
You're going to start doing a live crypto show on the stream through Zoom to all the social media stuff. We're starting on Monday, the 31st of September. More details to follow on that. Thanks for coming in, Sherry, mate. It's been really good. I hope you weren't too nervous.
Sure. Glad to be here.
Nervous before they. Don't worry, mate. It's just recorded online forever. Rightio. Look, without further ado, I think I am heading to Ainslie to talk gold. Gosh, Ainslie, it's been a busy show, and it's quite nice to be talking to gold because it's been a quiet week on gold, right?
It's been a really quiet week on gold. apart from that one pullback during the middle of the week, earlier on in the week, I think it was Tuesday night, Wednesday. But then it's consolidated and we've gone sideways whilst we've been watching everything else going on in the market, especially in the S&P and the NASDAQ. So, yeah, we've certainly gone sideways. To add a little bit of text.
My screen back up at the moment for you, Ainslie.
That would be great. Thanks, Paul.
So I can share. It's being a bit zoomy. It's the new word in our household for naughty. If you're a little bit naughty, we call you a bit zoomy in my household because it's always a little bit naughty. Look,
hello. There he is.
Here we go.
XAU.
Oh, sorry, God, I can't even read.
Wrong one.
Where's it gone? There it is. Gosh. Sorry, gosh, I'm getting old. It is, you know, it's one of these things, right? That markets are, you know, even the NASDAQ at some stage is going to get tired of running up that hill. At some stage, it's going to have a break and go sideways for a while. That's how markets work, right? Eventually, they do consolidate, right?
They do consolidate for, you know, for many reasons. Economic, whatever's happening currently with economic data. The other one is it's just profit taking. You know, and I did it myself. I got to my level and I closed my trade. And it's not just me, it's just everybody at that over, as Ash has pointed out, it's overextended. It's certainly quite the parabolic rise, but we've also, when we see those retracements, they are short and they are shafty and they just take it straight back down again. Yeah. And that's just one of the things that happens with gold. It gets to a level, that's the daily. And you can see now, the last couple of days, nothing's happened after we had that Wednesday retracement.
And what this thing does tend to do is it tends to range and then pop out of the range, right? It does tend to come out and get going, right?
That's right.
It's likely here we'll have this settle for a little while, but when it goes, you know, the longer it goes, the more it tends to pop away.
Yes. Correction, absolutely. It seems to be a correlation between just sort of like tightening of the spring. So the longer the spring tightens, the better you can expect the pop to be. And we've seen it now coming into the beginning of September, which is early next week. The seasonals, and I know we haven't spoken about that for a long time, and I you know, hate to be glib about it. We did talk about the seasonals being long in July up until about the end of August. And lo and behold, and hallelujah for that, it did. But with the proviso that there are obviously, it's a directional, it's still on the way up. It haven't seen a reversal. Have we seen a reversal? Will we see a pullback to 1,500? Look, it'd be lovely because, yeah, I'd certainly be buying. But I agree with you, Paul, totally that what you said earlier is that the sentiment is still pretty strong. It's
just feel as if, Ainsley, let me ask you this, right? What are the chances of gold coming back to 1,500 without you buying?
If it came back to 1,500?
So what's the chance of it getting between 1,900 and 1,500 without you buying?
Slim.
Yeah, the thing is, if it gets there, something's going wrong because every trader is going to buy this at some point between now and there, right? Every trader is going to find a dip and buy it. I'd imagine that these little things we just put on here.
Yeah,
probably a bit of buying around these.
Exactly. So the underlying story is, and we keep reading about it, and it just feeds into the sentiment and perception of where gold's going. Because it has been such a strong safe haven for, you know, these last 6 months particularly, is that it's going to continue to increase in value. And it's that fallback position. You know, Ash has gone gave us a lot of detail about what may or may not happen on Thursday and where the US dollar may or may not go. And that's one thing, but we all know that these other markets are all interconnected. And it comes down to a priority of where you're going to put your money, where you think it's going to be safe, or whether you're going to hold it, whether it's going to go to 2,300 by the end of the year, or whether you think it's going to get to 3,000. There's that belief, there is that perception, there is going to be some movement. It doesn't go from A to B in a straight line. as much as I would like it to, on the days that I'm going long or the days that I'm going short, I would really like it just to hurry up and get there, but that's not the way it goes. So it is a sentiment. It is, you look at what it has traditionally happened. We've got, and if anybody doesn't subscribe to Markets Made Clear or keep an eye on the seasonals, I know it is an unusual situation, but there has been a lot of unusual situations over the last 50, 100 years that have impacted these kind of things. Like I said, it's a matter of where are we now to, Warren Buffett added his stakes to gold. Thanks for that, Swee. Yeah, and that was, he's been right away from gold, and even he's got on board with gold. So, that kind of thing, that's why I'm talking about sentiment as opposed to economic data or what's happening on the S&P. If the US dollar goes up, yes, gold should come back down again. But if to look for those dips, look for those levels, the levels, they're not hard to work out, as you said, as you pointed out there, Paul. They're not hard. You don't have to be Einstein to work out where those levels are. And if you're not sure, just do it proportionately and scale in, as Ash suggested before. And as you know, that scaling is, particularly with gold, is one of the things I prefer to do rather than just whack a big position on.
As I always remind them, just get your risk off your first trade before you scale into your second if you're using one of my accounts, if you don't mind. Look, Helen, can you post questions into chat with everybody else? I've missed that question from you for quite a while now. Look, Fred, the trades you can see on here, well, this is my account, a little test account, and these aren't all my trades. These are trades that some are copied off Actions to Wealth accounts and some of my own trades, so they're a mixture, and I wouldn't be using these for education purposes right now. They just happen to be a place that some of the accounts, some accounts copy to, and others are my own trades in here. My sentiment on gold has been the same for some time now, that I was looking for a chance to buy it and hold on to it. And look, I think that one of the things that I think one of the common threads that's going through the gold analysis, and please, Ainsley, correct me if I'm wrong here, or Julian, jump in if you don't agree with this, but I think that some people are saying it's going to 3,000, some people are saying it's pulling back, but everybody's saying it's a buy at the right time. And I just can't see gold without some kind of disruption to the market, which is it's possible in this world, let me tell you, but I can't see gold below 2,000 at Christmas personally. No. I don't necessarily see it at 3,000. So for me, I've got a bit of a position I'm just looking to build over time. Same as my S&P positions. You guys have seen every third Monday of every month I've bought an S&P and held it, as well as my standard S&P trade. So it's just, and this is just a little account this really is an account where I play. I practice a few different things. Thanks, Helen. Much appreciated for that. Okay, Angie. So for you, it's a buy the dips, right? We're not 100% sure whether we're going to pull back more, whether we're going to consolidate here, but you can buy the bottom of the range. You can buy the pullbacks, and if you want to be patient and wait for the first high low, it's going to be a great place to buy. One would imagine, right?
Yeah, I mean, if you drop down to a 4-hourly chart there, Paul, you'll see how much we had that sell off on Wednesday, and then it's just gone sideways, and it's every bar on the 4-hourly has closed with it there. Yep. Move it along. Look at that. Look at that. Look, it's gone like a picket fence. And just to explain where that low test bar clipped, it went looking for the 200 simple moving average on a 4-hourly chart.
Yeah, so picked up the exponential as well at the same time, Ainsley. So I tapped on the simple perfectly, and the 200 on the exponential was about halfway through the tail.
Yeah. So it's like I said. I mean, from a technical point of view, and it just it goes looking for those kind of things. But you look at the last couple of days, that's not for a longer hold. That's just consolidation. That's nothing happening, and it's waiting. As Ash pointed out, let's see what happens with the other bits and pieces that impact it, because all the markets are interconnected. So Thursday will be interesting, and we'll go from there. But as I said, the seasonal charts are for the beginning of September on a presidential year is for it to trade sideways. for the beginning of September, and then mid-September, believe it or not, is to see an increase. Remember last year we were talking about gold and we're waiting for that reversal from October to November, and we were looking for that really strong pullback before coming into December and the December trade, the December rally. And it just didn't happen. It got to a certain level and it just wouldn't go any further, and it just consolidated. Didn't go down to where we thought it would go, and it just went sideways. Who knows? It might just do that and then take off again in the middle of September. But at the moment, it's just chewing on and it's waiting for more information. You know, okay. Whatever it's gone up, it's come back down again, and we're just sitting within that whole range.
Ainsley, I'm keen. I've got to get to Lloyd, and I've got Geoff waiting for us for charts. We haven't covered oil today. Do you want to do anything on oil, or is it really just a wait and see on oil while we wait to see what OPEC Plus
Oil's the same. Yeah. Well, I was listening to what Julian was saying. It's exactly what I've been reading is it just has not picked up. You look at that. Ugh. Oh, on a daily chart.
This is very much the shape that Al Brooks talks about, isn't it? With the accelerated move slowly coming out to a trend. All that's really good. And the Al Brooks world even is accelerate and then hit a channel. And what it hasn't done is a channel. It's just continually flattened. And really, this here, my gosh, how Pungnee's smashing it in that market is, you know, that is some good trading, because there is not much opportunity to get in there and really get amongst it. That is a market that's not doing a lot, right? Good on him. He is.
And good on him, because he's sitting in front of a chart and he's across it and he's down on an hourly chart. I know he's down on an hourly or less. And for me, this chart doesn't suit the higher time frames that I tend to do, because I'm looking for that trend. I'm looking for that, you know, to get on board and get it to move. But I've got nothing there. I haven't got a higher high. I haven't got a higher low. I've got diddly squat. So for me, that's something that I can't trade at the moment. And over to Geoff. Hey.
I don't like to use ultimates very often in this show, but that is one of the worst ranges I've ever seen.
It's tough stuff.
That is tight and messy, and I've overdone it. I mean, the range is really.
It's tighter than that. You can look at it. You can look at the chart and the levels. You know, at 11 o'clock in the morning, and 12 hours later, come back and just go, oh, right, we're back there again, and it's hard yards. It's you can't call that a trend.
No, you certainly can't.
So it depends on what you want to trade and how you want to trade it and what time frame you want to trade. But on that, for me, I'm the minimum I go to is a 4 hourly, and then up to, you know, I want the daily, and I want those moves that will make the bigger money, because I need to scale, because I can't get any leverage on that.
Yeah, look, it's one of the things that I will just do a quick demonstration of, and look, it's just something that people say. It's not the end of the world, but one of the things that traders say, right, is the longer it goes, the higher or lower it goes. That the distance the range goes, let me see on you, what of that range. I do want to move on to Lloyd. I've got some questions for him. The longer this goes on inside this range, you can put that range on its head, and it will often go that distance or that distance. So just to me, we've got a decent breakout coming on oil. For me personally, and it's only, I don't trade oil, and I just don't, unless I don't trade oil, I hardly touch it at all. But if I had to pick a direction right now, just off a personal bias, I'd be short. But that's more,
true.
You know, that's not trading talk. That's just a basic sentiment thing at the moment as well. Cheers, Ainslie. Thanks for the stuff on gold. We'll have you back. I have a feeling next Sunday we'll be talking about Thursday and Friday, and there'll be some kind of move in gold, which will really have.
Hopefully.
Yeah. Quiet till then. Might be a good day for moving house. A good week for moving house early in the week, Ainslie.
Yeah. Love boxes. Love packing tape. Here we go. Okay. Thanks.
Cheers, Lloyd. Are you with us, Lloyd?
Hi, Paul. Yep, I'm around here.
Man, I wondered if I could grab you off topic for a second. Is that okay?
Yeah, sure.
You published an article today or yesterday about the accuracy of seasonals at different times of the year for currencies. And can you give us a quick summary of it? That was in the staff chat, wasn't it?
Yeah, that was in a staff chat. I need to have a look at it.
Okay.
Let me see.
Look, I'll talk, and I only read the bio on it, but it suggested that the seasonal trends in the last quarter of the year were a lot more accurate and strong than the seasonal throughout the rest of the year, from what I remember of the bio on it, Lloyd.
Yeah. Because,
so I get you back on this. I'll tell you what. How about if we do your cross on relative currency strengths? I'll get Geoff in, and you can pop back and ask some more when you've had a chance to read on. Is that okay?
Sorry, but after this, I got to run.
Oh, you got to rush. I don't put in too much of a spot, mate. Let's do the currency strength, and we'll come back to that article next week if we need to, eh?
But actually, just to repeat what you said, what you're saying is actually accurate. Yeah. So according to the report that I read, what seasonality emphasizes that the traders can put greater weight on trend trades that occurs towards the end of the calendar year, which is actually about now, the fourth quarter of the year. Yeah. So from there, the seasonality studies states that seasonality as an indicator is much more accurate towards the end of the year. Yeah, because that's when trend really takes off well.
Interesting. That is interesting to me. We should be we're well advanced. I'm talking to the IT guy again on Tuesday or Monday. We have got some seasonal data ready for you guys. We have got some COT data ready for you guys. Shouldn't be too far away. So, mate, this is the relative strength of the currencies from the highest to the lowest, and you're telling me right now that for you, euro is the strongest relative currency at the moment.
Yeah. So I would still think that euro will be strong, continue strengthening. In fact, the chart didn't change too much. I think I only swapped between the last three positions. Yeah. So euro, I still think it's gonna strengthen continuously. I don't think there's. In fact, it didn't hit 120. It didn't really touch it. Yeah. But it does have very, very nice higher the cyclicity you can see from here, high and higher low. Yeah. So I don't think at this moment I will change my analysis much. Yeah. So the good thing is that on Friday, even Thursday, Friday, you can see that. Let me just zoom it out. It's actually a test bar. So it just tells me that buyers are still getting in. So euro is still going to continue strengthening. Now, Swiss is a bit disappointing. Yeah. Initially, I do hope that price will actually bounce off 110. Yeah. So it actually smashes through it. And now that the buyers are still inching upwards. So this is a bit of a disappointment for me that 110 didn't really hold that well. But in all honesty, it isn't that the trend is broken. It's just that I'm disappointed that the level didn't hold. Yeah. But we can see that the buyers are still present. So as for this, the midterm analysis for Swiss currency, I'm not going to change it. Again, for Canadian currency, you can see very nice cyclicity going on. High, low, high. Now at this stage, I'm still going to reiterate what I say last week is that I would still suspect that the CAD currency is due for a retracement. Yeah. For the better part of last week, price is actually consolidating. It didn't really move much for the Canadian currency. Yeah. So although I think it's going to strengthen, probably for next week, it might just actually weaken down. Yeah. So just due caution for CAD. Now for the last four currency, Aussie, Pound, Kiwi, 5. In fact, JEP and DXY. Here's the thing: I don't think they are weak. It's just that I don't think they're going to strengthen anyway. Yeah. So in regards to that, what I'm trying to say is that I think they're just going to go sideways. Yeah. So Aussie rank a.
Yep. Sorry, I was just going to say, what about the Aussie? Yep.
Yeah. So Aussie rank higher than the others is because it still has its cyclicity impact. Yeah. But you can see from 2 weeks back, it really isn't, the trend really isn't really strong in that regards. Yeah.
Right. The strengthened up cyclicity indicator on your charts is a wonderful tool, isn't it? That cyclicity indicator is a great tool anyway, but when you widen up those lines and make them really obvious, it just shows you higher highs and higher lows really clearly, right?
Yeah, it's just made for easier reading. I mean, all I'm trying to do is just make it easier for my mind to know at one glance what the chart is trying to tell me.
Mate, it's really cool. I really do like it. But mate, we had some, I don't know, mate. There's, I believe there's been some really nice add-ons this year as we go along. Mate, got a question on what you think on New Zealand dollar. Look, with the seasonal stuff, I'm not going to go through our seasonal rundown of every currency pair right now. We just can't fit that into the show. But I'm taking it under advisement for the next couple of weeks. Let me do some work on some seasonal stuff for you. Thoughts on the Kiwi, Lloyd?
Kiwi, yeah, I'm gonna get to it soon. Pound, we can see pound is very clear cut. This is in a range. There is somewhat of a cyclicity, but I don't think it's really strong since back late July till now. So you can see that price is really stuck within the highs and the low. It did sort of break, but you can see that the bearish momentum when it breaks down is really high. Yeah, you can see this bar is larger than what the rest of the bar for the past couple of weeks. Yeah. So with that, pound, I do suspect it's going to be in a range. Now, Kiwi, I think it's in a mess. Yeah. So for chart pattern traders, you can see from Kiwi, this is in fact, it has developed into a sort of a head and shoulder pattern already. The left shoulder, head, and right shoulder. Yeah. But I'm not going to about to say that there's a reversal going on because price is still well within my horizontal level and the 65 region. Yeah. Price has been in here since early July anyway. Yeah. So that's why I say that the last few pairs, as what the price indicates, they are most probably going to be stuck in a range, not going anywhere soon. Yen is going to range too. I've been saying that actually from the last two shows. So indeed it is ranging, and its range is actually narrower compared to the rest. Yeah. You can see that this is actually 93.7 and 95. Yeah, so that's about the story I can say. And dollar. Now, dollar is on a plunge, but since last 2 weeks back, we can see that its bearish momentum has in fact reversed already. It did make lower high and lower low, but from the MACD indicator, we can see that it is actually trying to strengthen. It's trying very hard to strengthen. Yeah. So as for anybody who's going to use going to short USD, I would advise extreme cautions. Yeah, don't be really go full on force for USD currency. Now, my game plans, I don't know whether I can advise this, is that for the last few pairs, Aussie, Pound, Kiwi, Yen, and dollar, US dollar, I'm probably going to try and range trade them for the next week. I think I'll be tough to find any really fantastic trend trading opportunities. Yeah, so that's my take for the next 1 week.
Cheers, mate. Thank you very much for that, Lloyd. Always good to have you on the show. And sorry to put you on the spot with the question about the seasonals. We'll talk a bit more about that perhaps next week. I'm a bit interested in the seasonals moving forward, mate. I think that gets us to technical. A lot of stuff goes on this chart on this show, and I really enjoy all of it. But I really look forward to the part where we get to talk about technical charts and technical patterns. Geoff, are you back? Has your internet sorted you out? Now you're back in the room.
Yeah, some silly person tried to ring me, and because I'm on my phone, it just cuts me out. Stupid. Who rings people at this time of night on a Sunday?
Who rings people in this decade? Don't they know about stuff and Skype and gosh, what would you use telephones?
Well, sometimes actually probably business call, but that's gone. It's all done, mate. You wanted me to have a look at the euro, so I best do that, but I can't actually do that without going back to the chart that really, in my opinion, means more than the euro itself, which is the dollar index.
We had a pretty good chat on the dollar industry too, so a dollar index. I'd love to see it, mate. And one of the things I will do for you guys, we've got a paid TradingView account, and I think we need to give you guys some access to it so you guys can a more consistent look at the stuff without pop-up ads and all that kind of stuff while you're sharing it. So let me sort that out for you guys this week.
Happy days. I've got a weird thing on my screen, but okay, it looks okay now. I'll go directly to that chart, and my take on that chart is that I've been trying for weeks and now months to get this back to this trade line, or trend line. Actually, it's a monthly trend line, and I know it's very acute on this chart. It really isn't that bad, but it just won't go back there. It just will not touch it. And to me, you'll probably remember a few weeks ago, we were trying to pick a level on this chart, and I think it was up about here somewhere around about the 98 mark, something like that. In fact, 98.18 rings a bell. I think we're at one of those pivotal levels now. And, you know, I've got no idea why the dollar could rally. I think I said about 3 or 4 months ago that I would trade tiddlywinks against the US dollar, and I think that was pretty much accurate. I do see this as an inflection point, though, and I see the level we're going back to is there around about 94. Let's call it 94, 84. Let's call it 95. So I think it's got every chance to go back to 95 from a technical point of view, and none other. I've got absolutely no other reason to give you that analysis other than technical, but that's what I'm here for. But if you follow that level across, which is this line here, the blue line, the blue top line, you'll see it's got form through here. But look where price is at the moment, and that's this line here, the dotted line. It's a very strong level where we're at, and it's got a lot of form over a lot of years. So I've got no reason to suspect that we won't get some sort of a bounce here. And if I'm of that opinion, then I've got to take this back to here, because that's the only level that makes sense on the next little plane. So let's call it 95. I see it back to 95, but then I want to be a seller once again. So let's go and transfer that, if you like, to euro dollar. And to my mind, it's more about the US dollar than it is about the euro. The fact that we've actually shot through here. But this is very interesting as well, and it depends entirely on which broker you look at as to how you draw, to me, how I draw my conclusion on this. If I go a little bit, I'll go back to where we were in 2017 and 18 and 19 and most of 2020 to date, where we were following this channel down. And anybody who's been in these shows for a few months will recognize that channel that we have been following for quite some time. And the important point on a monthly chart here was that we actually smashed through that level after pretty much 3 years. Once we did that, it was pretty clear to me that we would go to the next significant level. Now, that next significant level is probably this trend line here, or even more so this trend line here, which is probably more important. And there's two confluence areas here. We bypassed this one, but I definitely see this one, which is around about the 122.13 mark, let's call it. Another very, very strong horizontal level. But if I look where we are currently, we're also at a resistance level, which coincides with this low here pretty much. If I then go to another chart, and I don't know that, yes, I can do that. It depends on your broker. And this was the point that I was about to make. On fusion markets, you can see very clearly that we are bang on that level. I'll go tighter. You've got context there. But we're bang on that trade line, or trend line rather, monthly trend line. And that horizontal level that I just pointed out, to my mind, technically, we've got to bounce off that. And if we don't bounce off that again, depending on what the US dollar does, then I'd be very surprised, because this is a strong level. Short term only, because I totally see, and I'll go back to my other chart, I totally see that euro dollar is headed for higher levels. And again, probably based, if nothing else, on the weakness of the US dollar, which I can't see reversing anytime soon, if ever. So those levels, to me, where did I put them? Probably on the daily chart, or not. Wow, okay. Maybe I'm on the other chart. Oh, there now, sorry, I'm on the wrong chart. Fusion markets again. Let's go back there. And the levels that I see this going to are pretty clear. To me, anyway. I'll just go a little bit wider so you can see them. In the first instance, when we clear this area here, wherever that may be, but I think this level has got a little bit of retracement, then we'll probably go through it. The next level is 123.30 odd. And from there, actually, I'll go to the daily chart. I see one more level. And where's it gone? Probably on the monthly. There we go. 138.23. Now, I don't see that going through there anytime soon. And I mean, we're probably talking mid next year before we get to there. Maybe we're not, I don't know, but we're a long way from there. The immediate target to me is 123.30 and in extension 138.23. Let's call it 138 anyway. Now, one thing that I will show you there, and you know I'm a pretty, I'm trying to find the right words. I use imagery quite a lot. And the image I see here is that image. So to me, we're going to go to here, and we're going to bounce back to here, and then we're going into here. When? No idea. Absolutely no idea, because I've got no way of drawing any time and motion suggestion there. But that's where I think we're headed. And how we get there, again, is pretty clear to me. We go to here, then we come back to here, then we go to here. At the moment, I've got to be a short-term bear, pull back maybe to this level here, which is around about could it be 113.60? I don't think so. I don't think we're going to go back there. Such is the weakness of the US dollar. Anyway, sorry, that was a very long way around sharing my opinion on euro dollar, but there you go. It's there. Now, the ones that I'm interested in this week, and euro dollar may come into that at some stage, but at the moment it's not. Pound CAD's on top of my list. And pound CAD, you'll see very, very clearly that there is nothing to do here in terms of a daily chart that's going up, down, up, down, up, down, up, down. It looks like my mother's sewing machine many, many years ago. I had to bring mum into it. She's not that well. Anyway, what I see at this very moment on the smaller time frame, which is the 4-hour chart, is that we're at the bottom of this range clearly. And this is a very, very important level right now. Do I see a pullback here? Most definitely. And if I do see that pullback, the people who follow my strategy are probably going to say he's going to go long, looking for a higher low back into the range. And you'd be right if I see that. But that said, Friday's bar is pretty amazing. And it has very, very clearly smothered every bar for the last, I think it's 8 days, 1, 2, 3, 4, 5, 6, 7, 8 days. So it's engulfed the last 8 days, and it looks to me to be on its way down. So if I go to the bigger picture, which I need to do, and say, well, okay, what are we really looking for here? Well, we've come off the bigger picture, top of the range last. And when we come off the top of the range, I'm always looking for a lower high. I don't really have that at the moment. Or do I? Question mark. I don't know. Maybe this is the lower high. But certainly that's what I'll be looking for. Maybe for the end of the week. I'm not 100% sure what timing is involved here, but I've got to be looking for that. And for that reason, I'm thinking long to get short, if you're with me. So I want to bounce off the bottom of the range on that big rectangle that we've got here. But that big engulfing bar has really got me. I really think we're headed short here. So I've got to wait for something of a significant lower high on pretty much any significant time frame. I mean, at 4-hour, daily, weekly, whatever. If I see one, then I'll look to trade pound CAD short. So it may not be a short-term thing. We may have to wait quite some time. But first instance tomorrow, I'll be looking for a rally into this area. So smaller time frames, if we get the opportunity in the UK session or the US session, we'll be looking to trade that back to the pivots. The red line there is tomorrow's weekly pivot. So that may be, well, in concert with the monthly pivot, the testing material for us. But that's what I'm seeing at the moment.
If,
so long to
get. Want to watch you on this? They can join you at 2:55. Is it 2:55 Sing or 8:30 Sing for the UK or US Open session tomorrow, and see whether it's pulled back to that level and give you an opportunity, right?
Yep, certainly. If that's pulled back to there by UK session, then we'll certainly be looking for setups, maybe to trade it short. Yep.
Nice, mate. Nice.
Interesting, because I'm a bull the pound, and we've been in pound trades for weeks now, and I hope that continues, to be fair. But a big pullback here wouldn't surprise me at all. Interestingly, Euro Swissy is the next one on my list, and you'll note a common theme here. We're in a rectangle, right? Exactly the same as we are on pound CAD. Now, this one's a little bit more, let me say, readable. And the reason I say that is we haven't got massive bars going up and down across a central theme. That's, again, the red lines that you see on my chart are going to be the weekly pivots tomorrow. So I'm going to have exactly the same approach tomorrow. In fact, I'd be looking for this very, very early tomorrow for a bounce here at some stage, get us back into that range that you can see, and maybe even have a look at the weekly pivot. I'd be prepared, and I don't trade Monday mornings, that's for sure, on 30-minute charts or 1-hour charts. But if there was any indication that you're going to get a little bit of a rally and a pullback and maybe a higher low in this vicinity, then most definitely I'll be looking to take profit at the weekly pivot. But more so, look for a bit of a continuation on that theme to the top of the range. I wouldn't want to go through it because I've got no idea where this goes next, to be honest. I think it's very, very messy and have no idea. But look at that. Those two rejections of the top of that range would suggest to me that we haven't seen the bottom here yet, and we may have another look at that. So I guess it's exactly the same as I just described on pound CAD. I really want to go long to get short, ultimately, if I can put it that way. So tomorrow morning, looking for a higher low here on a smaller time frame and trading it to the long side. But
do you want to go long to get short, or do you want the market to go long so you can get short?
Look, I think either, Paul. I think if there's an opportunity here to go long, then that makes perfect sense to me.
Bottom of the range, yeah.
Yeah, monthly pivots just rejected this time and time again. So would I leave anything open? I don't think so. I really don't think it can go long here, but definitely be taking 95% of the trade off at this point, and certainly some off before the weekly pivot, no question.
Cheers.
So that's Euro Swissy. I was going to look at dollar yen, but I decided not to do that because it's just so untrustworthy at the moment. It is a total mess, and I can't even draw an honest, in inverted commas, rectangle around this. The big picture here is also very unclear. There is a channel going south, and we've been following that for some time, but it's not giving me anything that I find integrity in at the moment. Look at the candles. I mean, that's just crazy. Wow. How do you trade that with any confidence? I don't know. And for that reason, I'm going to still stay out of the dollar yen. Euro Kiwi is the third of the four. And are we already in this? No, we're not already in this. But I did see during the week, or was it last week? I can't quite recall, a lovely little tweezer top sitting here at a resistance level. And I was bursting my boiler to get into this on a lower high. This is the candle pattern I'm talking about. Didn't do that, and we didn't get an opportunity to trade it. But I now like the follow-up, if you like, another rejection of that level, which if I go a little bit wider, you can see is significant in terms of former resistance here and support here. I think the level is sound. And I do see this retracing somewhat. We have gone into that consolidation area without question. But that little tweezer top that I saw, which has now been confirmed by, let's say, a bearish engulfing bar, what I'm looking for tomorrow is a test of the weekly pivot and a short. So it's a very common theme, isn't it? But I haven't got any way to trade this long, I don't think, unless it got to the weekly pivot of last week. If it gave us that double bottom, if you like, on last week's weekly pivot, then I would probably think there maybe is a short-term trade to get long to go short. So again, it's a very common theme that I'm looking at this week. And Euro Kiwi is definitely one of those, following up, as I said, on that previous week's beautiful little double top sitting there, or tweezer top at that significant level. So I haven't seen anything to change my mind here. It's still rejecting that level. And the last one, and we're already in this trade actually, it's Aussie dollar. And Ash and I were looking to trade Aussie CAD short last week fervently. We were really keen to trade it. and I think Ash is still in it. I didn't find an entry, but I did find an entry on Aussie dollar, and I'm pretty pleased I'm in this, to be fair. We picked this pretty much right at the top. We entered here, and we're going okay with that one. What's going to change? Well, nothing. I think, again, this is exactly the same as I just described on the previous three. If we do come back to here, which is the weekly pivot of tomorrow, then I'll be looking to add to this position, actually, and trade it down to the bottom. Do I want to go through there? Look, again, it's back to that chart that I showed you the first, and 2 or 3 people have looked at them. Shukri's looked at it. Ash has looked at it. Lloyd has looked at it. The dollar index chart is really what this is all about again. And I think if we can get a pullback here, then that dollar, if that dollar does come back to that 95 level, then this should go down to at least here, and maybe an extension if you want to keep a little bit open. Maybe even back to, let's put that horizontal level on the chart here. It's around about there somewhere as I see it. So you're looking, somewhere between 69 and 70, I think, is that level. And I think that's entirely possible on Aussie US dollar coming up this week. So if you aren't in this already, I think if you look for that pullback tomorrow to the weekly pivot, which is, as I say, at this level, around about 71.90 mark, then I think there's another short on offer. And as I say, I'll be looking to scale back into that.
But a few of your team are popping in and talking about that EuroCAD trade in the chat. They seem to love that.
EuroCAD, we got into EuroCAD. I think this is the 5th or 6th time in 2 weeks we've been in EuroCAD. That's it there. And we've done okay on it. Well, I think we've taken 6 lots of profit, and we've had 1 TP1 that got knocked out for the second TP. But we're back in it again, and pretty keen on that one. I think that's
currently up over 1,000 pips, right?
Over the 6 trades that we're still in, we're 1,030 pips net at the moment. Yeah. Right, and there's only one of those that's not safe in the market at the moment.
It's been a miraculous run on the slingshot, hasn't it?
Going well, mates. We've, as you know, tweaked her up, and she's performing pretty well. Yep.
Yeah, mate. I think it's still a really good study. You know, it's a couple of years ago now where the slingshot sort of stopped working for a few months and caused us some real heartache, and we spent a fair change, you particularly, but a few of us trying to give some help. I spent a bit of time on it, really seeing if we could fix it and make it modern, and boy, it's come back good, hasn't it?
Yeah, look, very pleased with it. Right up my alley, as you know. It's still fairly low risk, and starting, actually, it's improved out of sight, to be honest, because where we were taking, 1 to 1s, 1.5 to 1s net on a dual position, we're now getting results like 10 to 1 every now and then's not uncommon, and we're picking off 3 and 4 to 1s reasonably regularly. So yeah,
one of the things I really like about it, Geoff, is it balances the other stuff. We teach so much trend trading stuff. To have something that works when trend trading stuff isn't working, it's just a brilliant addition. And I think if you're going to trade 2 strategies, you want to trade something that trends and something that doesn't, and keep it pretty simple, guys. You don't want to get too far away as well. I wouldn't trade the slingshot, which is sort of detailed and back to the middle quite a bit, and say Orlando swing trading strategy together. I think that's too far apart. I think a basic trend trading strategy with Orlando or a basic trend trading strategy with Geoff probably works, but you've got to keep your psychologies. You can't trade stuff which requires completely different psychologies at the same time. I think it's very hard to do that long term, and I think for a lot of people, picking the 1 or 2 strategies that they're going to focus on is a big part of what they're looking to do. Mate, back to you.
Oh, that's about it, mate, I think. I don't see any standouts this week at the moment, like that I can say, okay, trade it tomorrow, unlike the previous few weeks where we had pretty much good success with that. There's nothing there that's saying trade me now, apart from Aussie dollar, I suppose. If you wanted to step up tomorrow morning and say, well, okay, I've got a beautiful little scenario here on Aussie US dollar, and I think it even looks better on the daily chart. You'll like that, Paul, I would imagine. And that little trend line sitting there looks pretty sharp to me.
Mate, we've got to do some work on these colours, mate. My eyes are getting old. I can make them try. I don't need the trend line, mate. I know what it's going through. You know, I like that pattern a lot, mate. I do. And again, no one else in the world trades that pattern, but I love that pattern. It's a beautiful, beautiful thing.
Yeah,
mate,
it's a lovely thing. And it's in context, so it should be okay.
If you're coming off the double top is really nice. Look, if there's not a trade for them tomorrow morning, it's okay because they can pick you up tomorrow afternoon or tomorrow evening or the next day afternoon or the next day evening or the next day afternoon or the next day evening or the next day afternoon or the next day evening. All are lined up with some free shows and your paid subscription shows. $35 a month, but you get some really good extra value in that US session where you trade that US, do the preamble live and free and the trading stuff live straight after that as well. If they want to do some of that kind of stuff with you as well, right?
Yeah, it's a bit like New York, isn't it? The city that never sleeps.
Mate, it's been an astounding week for me. I live in New Zealand, and Donald Trump's been telling the world what a shambles New Zealand is with coronavirus, how bad it is over here, and how you wouldn't want to.
He's been giving you a hard time, hasn't he?
He loves to have a go, doesn't he? So I thought I'd remind anyone else that's listening. So far, the scorecard is New Zealand 22 deaths, America 180,000 deaths. A little crazy, Donald. I think you should keep that stuff, That is just straight out politicking, and anyone won't accept that for real. We had a small outbreak in New Zealand, shambles. I know it's a trading show, but boy, it's been a weird week watching that stuff go on. And you do wonder what some of these world leaders are doing. And this swap from substance to charisma in the leadership of the world is deeply concerning at this time to me. Not only Donald, too many leaders in this world who are TV stars or would be TV stars instead of CEOs. People who are about image instead of about getting the job done and looking after the country. And right now, the world is paying a big price for some of this populist, in my opinion, populist stuff. Just a thought. Wonderful to see you all again this week. I shouldn't be too grumpy. It's the end of the show. It's been a great show. It's been another long show. Boy, we get some good stuff in, don't we? Going for an hour 45, I think, on this. We're going to go to staff chit-chat in 2 or 3 minutes for those of us that can. For the rest of you, have a good restful evening tonight. Get some sleep and trade well tomorrow. Make good decisions because that's all the game is. Make good decisions all week next week and see where you end out. You'll end out in a place you're pretty happy with. For those of you that came in and watched Trader Andrew on Debut on Saturday, I hope you really enjoyed that. The feedback's been amazing. And if you do want to do something extra with your trading and you haven't committed to anything else yet, don't forget Julian. We're very, very lucky at the moment. We have some very, very good people helping you guys out on this journey. And as I said before the session with Andrew on yesterday morning, I said, guys, it's not about him partnering with me. It's about him partnering with all of us. That what we're looking for is people who can add balance and add extra and help all of us become more profitable. That's the game. That's what we do it for. And work hard and keep at it. And may you all have a good trading week. Cheers, guys. I'll see you next week.
Hey, Root.